We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. Here we are with the SPY, the S&P 500 index, having another volatile day. And after the FOMC meeting, even though the hike was 0.5, the stock market fell. But today, at the beginning of the day, there was some strength there. And our SPY bot at 9:15 a.m. sent out a bull indicator. Our inflows crossed the midpoint to the upside. Full strength there into the bell and after the bell on 42 vision, and call options went up 100% plus within an hour, guys. If you guys want to receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors, receiving this clarity and edge over the charts and using these resources to maximize in either direction, whether stocks are going up or going down. So here we are with the SPY pulling back down towards 400. We continue to test that area as support. It found support above 395, which was the next support level below that. If we broke through 400, and we have some key levels to talk about here, as a lot of people are speculating a Santa Claus rally. We're going to break it all down, but before we do, I want to share with you guys the home run opportunity that was mentioned today over at the Discord. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks and receive this clarity and edge of the charts, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So the home run of the day was from our Apple bot. Our Apple bot at 2:05 p.m. sent out a bear indicator, and from that moment forward, outflows crossed the midpoint to the downside. Pure weakness there on 42 vision, and put options went up 100% plus within minutes, guys. If you guys want to receive this clarity and edge of the charts, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY, the S&P 500 index, doing a complete transition from the rip area to the dip area here on the 15-minute chart. And the last time we hit a dip area was back here on December 9th. We went into a rip area on the 12th, continued here on the 13th, which was yesterday. And today, it completed the transition in today's price action from a rip area to a dip area. For those of you coming across the channel for the first time, this is 42 vision, which allows us to have that edge and clarity of the charts to see the dips from the rips to the dips, and where the strength and weakness lies within the charts. And we also use our bull and bear indicators in inflow versus outflow as an extra layer of confirmation, which I'm going to pull up here, and you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors, all looking to learn and grow together by receiving this clarity and edge and using these resources to maximize in either direction, whether stocks are going up or going down. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So here we are with the SPY under a bear indicator in the second half of the day. And in the last several days, we got a bull indicator here that was pretty strong on the 12th and lasted all the way up towards 414, 410 rejection here at the bell. Got that bear indicator around 407, fell all the way down to 399, and you could see those outflows and when these inflows picked up. And then today was pretty choppy. And at the beginning of the day, the inflows picked up, got that bull indicator, and went from 401 to high 405. Within that sideways action towards the FOMC meeting, the outflows had began. They crossed over, got that bear indicator, and fell from 404 to lows here of 396. That was some pretty wild downward pressure here within just minutes after the FOMC. And in yesterday's video, I shared my opinion and perspective. It's just my perspective and opinion alone, not financial advice. But volatility will continue to persist. And what I'm doing is I'm trying to maximize within the volatility what the charts present us and maximize in either direction. Because after CPI data came out so great, the market fell. And I shared in yesterday's video my thought process on it, on everybody waiting for what the Fed's going to state, and also the fact that 7% is still far away from the Fed's goal of 2%, right? And then today, everyone was expecting 0.5 rate hike. That certainly happened. But now the Fed funds rate is higher than expected. It was between a 4.5 to 4.75. And now they raised it up and bumped it up to about 5 to 5.25 or 5.5, somewhere around that area, which is a higher rate hike cycle, which means more rate hikes to come. And a lot of people were not pricing that in. And here we are with this volatility and continuing to fight to stay above 400. This is the psychological level that everyone's watching, that either when we're above it, and this is just speculation, not guaranteed, and not financial advice, but this is what's been going on, and this is what everybody's looking at, right? That when we're above it, the bulls are in control, and the closer it gets to 410, the more strength they have. If they can get above 410, that goes ahead and makes the bears lose the battle on the tug of war based off the speculation. And to the downside, anything below 400, the bears are taking over, and 390 is that key level that everyone's watching. And also, when you zoom out here to the 1 hour, on that 390 mark, we've stayed above it since way back here when the market started to rally on November 10th, got that bull indicator, and those inflows hit highs here of 16.23. Yesterday's inflows, they looked pretty strong, but they didn't even reach that high. They only went as high as 13 to 14 on the inflows, and the highest we reached was back here on November 10th to the 11th of 16.23. So we've stayed above it within all the volatility here of 390. If 390 gets broken through, that's going to be a critical level to the downside. And to the upside, we keep on rejecting that 410 to 415 area here. And you could see it there where that last bear indicator popped up here at 415 since September, okay? Super important to keep that in mind, that we're in a really tight range here when you really put a channel here within that area of 390 to 410, 415 above that. This is critical, and 400 is that psychological level that everyone's watching. And me personally, within the volatility, I'm watching these inflow versus outflows and what the charts present daily. Look, we're looking at it here on the 1 hour, and today things were pushing upwards, but we're still under a bear indicator since way up here at 405, and that's exactly where we rejected today, and the inflows lost traction, outflows started to dominate again, and now we're back to minus 585 on the outflows, and the highest that we reached in the last several weeks and days was down here of minus 4.4. So outflows are even more predominant right now than they were on December 12th when we were around 393. So this is critical to watch here, how the 1 hour continues to react, and it's still under a bear indicator. And on the 15-minute, here we are with inflows trying to come back up, but it's going to be more significant if it could cross back over it. So I'm going to be watching that going into tomorrow, and if those inflows could start reflecting into the chart and cancel out this bear indicator and get a bull indicator in the process, right? And also here on the 30-minute, if we go ahead and look at it, you could see that the outflows are dominating right now at minus 6.39. I'm going to be watching that as well. And then also here on the 1 hour, a very steep downward pressure here to minus 5.85. This needs to level off and start coming back up. Even if it doesn't cross back over the midpoint, start coming back towards it. And same thing for the 30-minute as it's below it here and sitting sideways, guys. I'm going to be watching that very carefully. So the first support level here is 395, as I stated in yesterday's video. It bounced slightly above that today at 396.40s, 395, and below that is 393, 392 area. And then below that will be 390. And to the upside, I'm going to be watching if this could break back above 403, 405. And if 405 gets broken through, the next key resistance is 408, where this bear indicator popped up here on December 13th. And once those outflows started to dominate and cross that midpoint and pull things down all the way back down to the 399, 397, 98 area. As always, guys, thank you guys so much for watching, and let's make some money.